What's going on, everyone? Welcome back to another video here. I've got an action-packed one for you guys this evening. We have a crazy end of the week coming up Wednesday, Thursday, Friday with all of the data. And it is really going to set the tone for what we're going to see going into the end of the year. Now, because of that and the different reactions that we could see from the broad market, kind of feeding into that potential recession narrative, or on the flip side, that the Fed might end up keeping rates a little bit higher for longer, there is going to be a lot of money to be made in a lot of different sectors. And again, as I always say, guys, you have to understand the big picture of the market in order to have long-term success. There's not going to be any little cookie cutter setup that you can put on your charts to magically make money, because again, if that were the case, there'd be billions of dollars running through systems like that, which there aren't. So team, let's get into it. Again, I am posting these daily YouTube videos for you guys, so if you guys wouldn't mind dropping a like down below. And remember, quick reminder here, guys, that the Discord is going to be launching at the end of the month, so next week coming up there. If you guys do take advantage to all the education that I already have with that 20% off discount, again, you get the Day Trading Mastery course, which has had like 20 winning months in a row with that strategy. Swing Kings, where we're calling out stocks that are about to explode before they do. Multi-hundred and 1,000% gains happening on a weekly basis. Again, guys, it is the best trading and finance education that you guys are going to receive. I hope you guys are ready for it. I know a lot of you guys are excited, but let's get into all of this data here. So the first thing that we need to discuss is what do we actually have in terms of data going into next week. Now, first, tomorrow we are going to be getting the meeting minutes of the Fed. Thursday, we're going to have the initial and continuing claims. We have S&P Flash Services and Manufacturing PMI, existing home sales. Friday's the big day here with Fed Chair Powell's speech at the Jackson Hole Symposium and new home sales. But tomorrow, we have a very, very important piece of data, and if you watched yesterday's video, we talked a lot about that, and it's that BLS revision to the employment data. Now, we have institutions like Goldman Sachs coming out with an expectation that there could be a revision downward of about 600,000 to 1 million jobs, with some other financial institutions saying, okay, maybe it might get revised down by about 300,000. Either way, if we do see a big downward revision in that employment data, well, it's going to show us that the unemployment rate is a lot higher than what we're seeing right now at that 4 to 4.3% area. And that is not going to be really good for the broad market here. Everybody's been operating under the expectation that, all right, employment is coming up, or unemployment is coming up, but it may be a lot worse than what the data is currently reflecting. Now, we saw this happen last year too with that giant downward 2023 revision that honestly, I mean, a lot of people did see coming. We were talking about it a lot, but it is something to be aware of. Now, what could potentially happen? We have to do this little decision tree here as to what the potential outcomes are if that does happen. Well, the first thing that we would expect to see is if there is a wild downward revision in that employment data, is yields would most likely come down as recession fears start to go up and the expectations for rate cuts start to go higher. More rate cuts a little bit faster. So we have seen a lot of those expectations there coming out and saying, oh, 75 basis point emergency cut, 125 basis points by the end of the year. Now, while those expectations are a little bit outlandish, we still could easily see these expectations move up from their current areas, even though they've given back some of those kind of outlandish expectations very recently, which again was why we were in that TBT trade. But here's how we can take advantage of this and how I want you guys to be viewing markets. Okay, so if rates could potentially come down, what would we want to look for? Or recession fear starting to head higher? Well, two of the different sectors that do benefit with recession fears is going to be healthcare and utilities. Now, when we look at UNH right here, this is a pretty nasty setup that we already see on the daily. We talked about UNH a little bit in the live stream this morning. It's not my favorite ticker to trade in the world, but this is setting up very well. Another name in the healthcare space, LABU. This isn't an individual ticker, but it is the 3 times levered biotech ETF. Now, again, being in that healthcare space and also a sector that is going to benefit a lot more from lower rates because it is a very capital intensive sector. Well, LABU here could easily get an additional pop if we were to see those rate expectations go up and rates actually come down. We had a very, very, very similar trade back in here after one of the FOMC meetings. So that is something to look out for too. The other types of sectors that we want to look for, again, rate sensitive. So SoFi is going to be another one here. We did enter this down on this day here in the 655 area. Again, you guys kind of know the thesis for this one. I did actually expect this to fall a decent amount more after their earnings. Kind of glad they didn't, sitting up very nicely on this new shares position here. But this is another name that could easily benefit. One of the things that people don't necessarily know about SoFi is that they do have a HELOC program, home equity line of credit. Now, when rates start to come down and you start to see a lot of these refinancings going through with the homes that people have been buying over the last 2 years here, well, SoFi could be a company that could significantly benefit from that. Another rate sensitive name, RKT. So RKT kind of already making a move to the upside here. Again, as always, when we do this type of analysis, guys, we start looking at these individual sectors, these rate sensitive names, and then we look for the charts to give us our opportunity to enter, which again is exactly what I'm teaching you guys in those educational programs there. And obviously we're going to be going over that a lot in the Discord once it is released. So RKT right here, not giving me really what I want to see yet, but if we can see some consolidation up at these highs here, I would be very interested. So those are kind of the things that we need to think about here. Anything rate sensitive, XLRE, the real estate ETF, we could look at REITs in order to take advantage of that potential short-term move down in yields if we were to see those recession fears starting to pick back to the upside and rates starting to move down. Now, this is kind of going to be a week-long thesis and something that we've been talking about a lot, but if we do end up seeing that significant revision down, when we go into Friday with Powell, I would kind of be all right and expect him a little bit more to be on the dovish side and say, we're open to cuts. They're not going to give a specific number as to how many basis points of cutting they're going to do by the end of the year. But it is possible that, again, if we see that significant downward revision in the employment data tomorrow, Powell could come out at Jackson Hole and be a little bit more dovish. If it doesn't happen, that's where we get into these other theses here. The other thing that I want to mention quickly here, I know we talk about TLT and TBT a lot, TMF. The TLT and TMF could continue to the upside too, obviously, if we were to see that move down in yields a little bit further, potentially back down to those recent lows here. So when we think about on the flip side with rates moving back up, let's say, for example here, that we don't see that significant downward revision. Well, we could then see something like TBT starting to move back to the upside here. I know a lot of you guys were in on this trade with me here where we bought it down on this day, sold it right above its 10 EMA here. Kind of a nice little bottom and top tick there. We could see something very similar like that happen again. And then thinking about that biotech space there, that's going to be Lab D. We do have kind of a nice little bottom here. We have 1, 2, 3 touches in this range. We could end up seeing Lab D end up making that move to the upside if rates start to head higher and those rate cut expectations start to get pared back, maybe to a 75 basis point expectation or leaning more towards that going into the end of the year. Now, the other thing that I want to make very clear to everybody before we wrap up this video for this evening is that I don't want anybody to be making any knee-jerk decisions based on tomorrow morning's data with this revision. This is going to take a couple of days to play out, and we obviously want to hear what the FOMC and Jerome Powell have to say about this. These revisions could potentially be already kind of encompassed into what they're already expecting and what their view already is of the labor market. Now, if that's not the case, again, we go back to that rate thesis of rates coming down and we look for those more rate sensitive names, the SoFis, the RKTs, the healthcare sectors. And the one other that we actually forgot to mention, I think, was utilities. So XLU, which has been having a pretty significant setup there as well. Really solid. We can take a look at XLU here. Nice little move to the upside here after that recent pullback. And also the largest holding of XLU, NEE. If we are to see some further consolidation here, we've already played a nice breakout to the upside. Twice, actually. We nailed this one back up. And I did have a position in here. I did cut this one today. Again, it was kind of a really small size for zero trade on that potential for the recession fears heating back up, and just overall the utility sector looking very solid as well. But again, going back to what we were saying, I don't want anybody to make any knee-jerk reactions saying, oh, we're going to buy a crazy amount of these bond ETFs or go crazy into healthcare. Guys, these things are going to take time. And this is the one thing that I think a lot of traders, especially if you're starting that transition from more day trading into swing trading, which all of you should be doing, information is the edge, guys. And you're never going to get the informational edge in day trading that you will with swing trading. And like I said earlier, with those types of strategies, those little things that people are showing you guys on the internet, they may look cool, but they don't actually work long term. So don't make any quick knee-jerk decisions. We need to see how all of the data this week actually ends up coming out and the market's reaction to it. And that's really going to be finalized by Jerome Powell's statements on Friday at 10 a.m., which we will be streaming. So team, that's going to wrap it up for this one. If you guys did enjoy this video, make sure you guys drop a like down below. If you have any other tickers you want to mention, or if you have any questions, make sure you guys comment them down below. But until next time, guys, I'll see you in the next one. Peace.